Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. Welcome back to the show, Bob.
Yeah, Jim, good to be with you.
The Securities Commission is now voicing concerns about Bitcoin, saying anything else that you speculate in, there's some kind of regulation, sometimes not a lot, but in this case, there is none. Are they going to look at rules for
it? Oh, of course, those bureaucrats will want to think they can control something. But, you know, we've talked about it before when we've talked about the Bitcoin phenomenon, is that it's mindful of the Tulipmania in 1637 in Holland, where different tulips became speculative darlings. And now that was also when Holland was the financial and commercial center of the world. So they had, at the time, sophisticated markets, and the authorities said, look, this tulip trading is outside of our normal clearing mechanisms, and you guys are all on your own, so to speak, is how they said it. And markets were being made in taverns on chalkboards and stuff like that, and it just went absolutely crazy. There had been a market for tulips for some time, but that one, when it went crazy, is when the uninitiated public got into it. So, and on this Bitcoin phenomenon, of course, the public has come in. You saw articles about people using their credit cards and selling their houses or mortgaging extra of their houses, and they had to buy these special computers for, as the word was, mining. Now, we go back to early October when published a piece and said it looks like everything's going to get bubbled, as in, you know, a real frenzy coming up. And it was even that even the Dow Jones industrials could get bubbled, and away it went. Now the price gains in the Bitcoin were greater than anything. I saw one study where somebody had put together a price index of tulips from 1637, but remember when I looked at it and did the research, I thought, I'm not sure these prices are valid, and so didn't do a price index. But at any rate, it did get out of control, and with our technical research, the last year or so, when any of the big dynamic surges came in, it would give what we call an upside exhaustion reading, and then you'd get a correction. Sometimes the correction was a day and a half. So it was not to advise trading on it, but just to, you know, show that the technical side was valid. But then it was in the middle of December, the technical work came up with a sequential sell on the 13-week basis, and it hadn't had one of those for a couple of years. So the conclusion was that there would be a much greater correction in the play. And we got the piece out on the 21st, which was the first real crack in the play, and this is due to the habit of publishing on Thursdays. So the work was quite valid at the time. So it came down very sharp, and the rest of them did too, Riot and all the different ones. But with that study we published, it pointed out that on previous great speculations, whether it was in the stock markets or in commodities or whatever, the intellectual economist would argue that the opposing force on a bubble is basically the compounding of interest, the cost of in this case your leverage. You got the cost of borrowing money, and what of course happens with the eager participants is that, of course, if you're going to make 20 or 30% over the next 6 months, who cares about 5% or 10% interest costs? So you have that drag, or as I called it, a friction. And then with the Bitcoin, you had the additional friction of cost of electricity for running the computer power to position these things with the coin mining. So that was an additional cost, and then cited the evidence of the first great bubble, the South Sea bubble in 1720, which company was a quasi-government company, and the whole play was exercising warrants, putting money into the company, and then the company was retiring government debt. So it was a good thing for government. Then, of course, a whole bunch of new people came in with new, as they called them in the day, bubble stocks. So the British government quickly brought through legislation, outlawing that no more bubble stocks, because what they saw was the money going into these new deals rather than into their favored stocks. So even then it was brought in too late to do anything, and the whole thing collapsed. But also then with the cryptocurrencies, you had, of course, everybody coming in with them. So you then had diffusion, whereby you had different counters to play. But at any rate, it reached a crest, and it's had the group have had a severe setback, the greatest in a couple of years. And it's fooling around now with certain moving averages, so we're watching it, because the other thing that we did in October the 4th was to note that some great speculative moves had a tendency in the past to peak near the turn of the year, December, January, and we say that was gold and silver in January of 1980. Then the Nikkei right at the end of the year in 1989. So there were examples. So the conclusion in October 4th was that it would bubble, and every bubble ran until it collapsed. And there was examples of previous great speculations concluding in December, January. And this one's at the moment's fitting that model. It climaxed. It's having a massive correction, and our guess would be is that this would likely decline further. There's been massive commitment to this, and it has an unusual cost other than the compounding of interest. You've got costs of electric and running these things. So I think that the decline in the Bitcoin has further to go. But I will add, Jim, that I think the end result of Bitcoins and blockchains will be a currency that governments and their economists will be unable to corrupt. It'll be relatively constant purchasing power and uncorruptible. Who knows, maybe it might be a Bitcoin that's convertible into gold. But the public will demand a sound currency and this demand could be quite forceful over the next few years. So, very interesting times.
Well, Bob, I was just going to suggest, what if you had a Bitcoin backed up by gold, so that there's some physical asset attached to it rather than just, as I say, a pipe dream?
Yeah. Well, for thousands of years, when push comes to shove and the public and merchants and traders and everybody wants to have a sound currency, it'll happen, and it will be gold. That's that you end up with the net result. There's times when, of course, silver is a petite currency. When you're on a metallic standard, the gold standard has been the best, and then you've had a silver coinage, which is very useful. So the political forces will come up with a sound currency, and somehow it'll be Bitcoin, blockchain, and gold, I would say, and I'm looking forward to it. Can you imagine the advantage of having a currency that some committee of wizards is not screwing around with and changing the purchasing power? So it'll be wonderful.
We'll have more with Bob Hoye right after the break.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're chatting with Bob Hoye. Bob, the Bank of Canada upped its central rate 0.25%. The commercial banks, of course, very quick to raise their mortgage rates. In fact, the Royal Bank jumped the gun and raised them last week before the Bank of Canada even did anything. Obviously, they knew the fix was in. What influence is that going to have on Canadian finances?
Well, it's the other way around, Jim, as I like to point out, that the central bankers follow trends in market rates of interest. So you got two kinds of interest rates out there. You got the administered rate, which is set by the Bank of Canada or the Federal Reserve in the state. And then you've got Treasury bill rates, trade on a minute-to-minute basis, and then write out the curve to longer-dated bonds. And history shows that the central bankers follow changes in this case, the T-bill rate or the equivalent as you go back in history. So, and with the boom, gee whiz, guess what happens? Interest rates go up. And if you look back for hundreds of years where there are notes of interest rates, they go up in a boom and they go down in the busts or the contractions. So, I'd just as soon not talk about what the central bank's going to do, but the U.S. Treasury bill rate has been rising quite firmly in the last 6 months, and it was beginning to show that there was a firmer economy coming along, which it has, and you've got on top of this a change from the most anti-business administration in U.S. history with the Obama administration, who are going to run everything, to now the most pro-business administration. And they've got some tax reform too. There's probably more to come yet. But the economy is booming. Hitherto, you've had the long bull market in financial instruments, stocks and bonds. And now you have, and of course, in the last year, the stock market has boomed, but now you have a boom in the economy at the same time. So at the moment, we're thinking, hey, this is wonderful. The the orthodox side of the streets likes to see a booming stock market with a strong economy, and that's what's happening. And Jim, as we often point out, the credit markets, the interest rates, what's going on, like the spreads between high-grade and low-grade bonds, is showing pretty good confidence now. The spreads have been narrowing, which is the way things work when you're hot. And also the yield curve, which is the difference between short-dated and long-dated treasuries, that's been still flattening. We don't know whether it can actually go to inversion, whereby short rates are higher than long rates. But at the moment, the action in spreads and the curve are still positive for the stock market. And then on our work, in November we got the springboard buy on one of the models, technical models we have, and we can call that one the buy the dips model because it's designed to be effective in a flat to rising long-term trend in the market. So that was the buy in November. And with that, we thought, okay, well, you get a pretty good seasonal move from November, December for industrial commodities right out to about March. So crude's been rallying, base metals have rallied, lumber is making new highs. So that's another one that's supportive for the general stock market, is to have industrial commodities going up, and they are. And probably into March or towards March, so we'll watch it. The stocks, though, for the oil patch stocks and the base metal miners became pretty impetuous and became a little overbought a week or so ago. But maybe it'll just correct its way out of that. So we're still staying with that generally stocks up until at least into March. The credit markets being positive for that, and the base metals or industrial commodities, firm into there, and that's our story, and we're staying with it, Jim.
We'll have more with Bob Hoye right after this.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're talking with Bob Hoye. Bob, I just saw an interview on BNN with Rona Ambrose, former Conservative cabinet minister and part of Prime Minister Trudeau's advisory team on NAFTA. She says the big problem is the American negotiators are showing no flexibility whatsoever. They have a political agenda from Trump that says NAFTA is bad. And she said it's really tough to negotiate with somebody who won't change any position at all.
Yeah, that's tough, but in looking back on NAFTA, I've always been a critic of it because it was a system designed by bureaucrats in Canada, the U.S., and Mexico, and it allowed the cheat of each central bank in each country to do the depreciation thing. So you can have a reasonable working trade agreements and means of settling problems, but if you're sitting there in the U.S. and Canada depreciates its currency and gets that favor for Canadian producers, and Mexico does the same thing, and so a lot of production went to Mexico, and I can see that, but if Canada is really keen on free trade, it is straightforward. Canada declares free trade unilaterally in every direction, and let's see how it happens. But in the meantime, a NAFTA agreement could be worked out if the parties, particularly Canada, agrees to not cheating on the currency, which means you would have the Canadian dollar pegged at par with the U.S., and then the rest of the trade agreements would work. And so is Canada going to do the right thing and say, hey, let's peg the currency? There's many thousands of economists in Canada who really are intellectual dreamers who wouldn't go for that because they think that they have to depreciate currency in order to make the economy work. So it's very intriguing, and I'm fascinated by it, but the Trump administration generally considers Canada to be a good trading partner. Where they have really been kicked in the shins is losing so much production to Mexico. And so I think it would really be a breakthrough if a trade agreement worked out, and with the understanding that each central bank is no longer going to be depreciating the currency relative to the U.S. They may work that out, but I'm telling you one thing, I'm sure the bureaucrats are absolutely shocked by what Trump is doing, and I think Trump is acting on behalf of the American citizens. And I'm not criticizing him. I'm criticizing the tradition of these trade agreements where they have allowed each central bank to depreciate the currency, and it could get really exciting if they figure that out and say, hey, peg the Canadian to the U.S., it would be wonderful.
And it's been pointed out to me, too, a healthy U.S. economy is good for the Canadian economy.
Oh, for sure. Yeah. And the idea of some economist at a central bank, like the Bank of Canada, sitting there thinking they can run the Canadian economy, it starts with a nonsensical position, which is the concept that there is such a thing as a national economy isolated from the rest of the world. Because that's what they assume, and they figure then this national economy they can run. But the border's 4,000 miles long, right next to one of the most robust and biggest economies in the world. And then if you go, let's assume then there is an economy out there that is as remote as you can imagine. And of course that's Iceland. Very remote physically. And what happened in the contraction in 2008? Bang, it got them. So there is no such thing as a national economy, and yet all of the theories of intervention rest upon that bogus concept. So I think here's another opportunity over the next few years where common sense by the public will prevail, and that would be to force a sound currency, which, as I said, has something to do with bitcoins and the blockchain. But as to the how NAFTA works out, Jim, it's going to be a very good spectator sport.
Bob, thank you so much for chatting with us.
Hey, good to be with you, and we look forward to next week.
My guest has been market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. If you have any questions for Bob or any of our other guests, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. You can find us on Twitter @HowStreet. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.